Okay, so in addition to the Facebook analysis, the Southwest Airlines, Costco, and Starbucks analysis, which I went through with you in a previous video, or at least the duration of that video was very close to 20 minutes, I forgot to speak about Micron Technology. Now, the more I thought about the position of Micron Technology, I started to begin thinking about that of the US dollar. So a little bit of a segue before I move into Micron Technologies. It is very important to just go through where the US dollar is in terms of a macro picture, because this obviously has severe implications for the pricing of commodities, which of course are backed in US dollars. Generally, there's an inverse correlation between that of the US dollar and the price of gold, silver, and also oil. So as you can see on my screen right now, if I change to the weekly chart, maybe this is best to really break this picture down for you. Since 2017, establishing the peak, the US dollar has been relatively weak. In fact, it has been more or less obliterated. Here we are. You can see the sell-off which has taken place throughout the majority of 2017. It's almost been like a rock, so to speak, sinking through a pool of water. There hasn't been any support. However, where we currently find ourselves in between this range at about 92 and also 94 is what we assume to be and what we can call a macro support area. The reason for this is because since the beginning of 2015, every time we have come down to about 93.50, you can see all these lower wicks which have set up over the past 2 years. It has been what we call an inflection point, or that of a macro pivot point. It is obviously respected. It is identified by technical traders around the world, or people who are active in the financial markets. And this is essentially where we would expect the US dollar to finally put in some form of a basing pattern. Now, the actual duration of that basing pattern at this particular point is a little bit sort of unclear. We don't know whether or not this is going to be the macro support and whether or not we will definitively close below the lows of last week's candle, but there is a very high probability that over the next couple of weeks, if not couple of months, who knows, it might even turn out to be a couple of year rally, that we are going to see higher prices for the US dollar index. We may even see the index come all the way back up to about 103.38, to these recent highs that we put in towards the end of 2016 and also the beginning of 2017. Conversely to that, if we see the bounce, it may only bounce as high as about 96. Now, it doesn't really matter immediately what the sort of resolution, or at least what the answer is to those two sort of portals, or those two questions which I'm asking. I mean, I can very easily make the argument for that of a larger bullish uptrend and the continuation of the macro picture to the upside. The reason for that is because we are still trending positive, all right? We're still essentially above all of the trend lines, and this might be just some form of an extended sort of consolidation between macro support and also macro resistance. Having said that, nothing is guaranteed in the financial markets, and generally, if this is to be a dead cat bounce, all right, essentially the continuation of this bearish trend, which we have been in since the breakdown, dating back to May 2017, we may see the US dollar only come up to, again, about 96 until it rolls over. Now, the reason why I'm referencing the US dollar is because it has important sort of ramifications and, I guess, an influence on the price of commodities. Gold and silver is going to come under significant headwinds, significant stress in terms of selling if in fact the US dollar strengthens. And the reason why I'm going through this for you right now is because if you just go through it and do a very simple sort of exercise historically, what I want you to pay attention to on my screen is that of the RSI. What I might do, in fact, is actually take off both the MACD and also the stochastic, so you can just see a better representation of price action and also the relative strength index. Now, what I want you to observe at this particular point, this is the daily chart. Let me just change this to a closing line for you so you can really see the clarity of this chart. What I want you to identify is that clearly when we get down into this area, all right, it is a tipping point, it is a reversal point, it is respected, it is observed, and generally this is where we start to see reversals occur from. Now, we've moved from more or less 100 since the breakdown all the way down to 93.50. That is a significant move in the US dollar. We are exceptionally oversold. And in fact, the RSI has just registered some very extremes in terms of oversold readings on the RSI itself. Now, what I've done, I've drawn a horizontal line on my screen just to go back in time and just to show you how rare it is for the RSI to register such levels. Now, in conjunction with the registering of that very oversold reading on the RSI, you have to pay attention to the location on the chart. And again, this is showing itself at a very strong area of support. So we're starting to see a little bit of confluence between oversold conditions at a very important tipping point or a turning point. Now, if you go back in time, this is most recently towards the end of July into the beginning of August. We obviously saw a little bounce, or at least a pretty positive day on Friday. You just need to go back and count the number of times where we have definitively touched this oversold reading. The next occasion, or really the first occasion that we've had, was at least correlates all the way back to August 2015, this specific point over here. And as you can see, what happened to the US dollar, it actually rebounded. Now, again, it went through a little bit of a short-term consolidation over the term, or at least over the space of about 2 months. But overall, it oscillated all the way back up to the top of the channel. Now, again, that is August 2015. If we go back to even April 2015, you can see the same picture. We oscillated. We didn't get all the way back up to the top of the channel, but the US dollar strengthened over time. And this is very similar to where we find ourselves at the moment. The difference is that price action really hasn't got moving at this particular point. So there is an opportunity for you to look at UUP. I want to bring that to your attention. There is an opportunity in UUP. Now, if we go back to a previous occasion, prior to April, again, let me just show you where April is. This is April over here. You need to go back to August. Very simply over here, you can go back. This is April over here, this period in time. Again, to go back in time and find a similar register, you need to go back to June 2013. We appreciated quite considerably, very close to 6 or 7% by the looks of it, during this period over here. And what happens is, if we start going back and looking at this and testing it, generally what happens is that the US dollar moves into a generally favorable condition. Now, again, the reason I'm saying this to you is that if the US dollar is strengthening over the next couple of weeks, if not couple of months, who knows, it might be the big macro continuation, and this may be some form of an intermediate pullback into the upper macro trend, or at least the established upper macro trend or bullish trend that we've been in for the US dollar. Well, then we would expect significant headwinds for that of gold and silver. And as it stands, I'm not going to show you the charts with all due respect in gold and silver, but they are at critical turning points, especially that of gold. They are already starting to break down. If you pay attention to the price action for the US dollar on Friday, have a look at the chart of SLV, obviously the gap to the downside, the directional bearish gap, and really silver didn't recover any of the losses. And that of gold. Now, gold did recover some of the losses, but again, a significant gap to the downside. Also, pay attention to that of volume, because volume began to spike on these ETFs, all right? Very important, the relationship between this. There is tremendous opportunity right now on the US dollar, bullish, and also commodities, gold and silver, bearish. Now, again, if you want to learn more about that and what we look for in terms of trade confirmation, also additional points of analysis, I would encourage you to email me, have a look at that analysis class, which I've done. But it's very important that you recognize this, because it looks as though the trends themselves, the big macro trends, are set to continue. And it may be as soon as this week upcoming where we're going to begin seeing some really big price movements in directions that people haven't really seen for a number of weeks or a number of months, especially on the US dollar. The gold and silver, I mean, they've been sort of ping-ponging back and forth in a really nice tradable range. I mean, we've really sort of capitalized quite considerably on some of those trades, especially to the bearish side. I mean, all of them actually have been on the bearish side over the past couple of months for gold and silver. It has rebounded back up into that critical spot, that area of resistance, what I call no man's land, and we're already starting to see those commodities begin to roll. Now, going back into the original discussion, this is MU. Let me just remove the dollar sign. MU is quite interesting as well. So this now we're moving into MU. This has got nothing to do with the US dollar or that of silver or gold. The reason for this was because I had this particular stock written down. This was outside of some of the emails I've been receiving in relation to, say, for instance, Facebook, LUV, Costco, or Starbucks. But this is something which I thought was relatively valuable and something that would be worth your time. Now, if you pay attention to what's going on, first of all, I want you to look at this downward line. This is what we call just a vertical line. And really, this is just a period of time. This is more so like a snapshot of what you should be looking at. Everything to the right of this vertical line over here. The reason for that is because this is where the trend has essentially started from. If you start connecting some of these dots or these consecutive higher swing lows, and you start extending these trend lines out into the future, you can see for yourself that although we have had a bearish trade set up at 30.77, personally I stayed out of this, but it has worked out quite profitably. We're all the way down at 27.92. If you're in this trade bearishly, then you should be thinking, first of all, to actually tighten your stops, lock in those profits. So I'd be more or less exiting this if we broke above Thursday's candle high or even Friday's candle high, if not just liquidating it more or less on Monday and just being happy with the profit. But also, the second point of this discussion is really, well, where's the tradable opportunity? And the reason why I'm talking to you about this is because we're back at this trend line. And this trend line, over the past or since the beginning of this trend, has acted as quite strong support. Buying pressure shows up somewhere around this line. And again, very similar to that of Goldman Sachs. This has got so many parallels between that of Goldman Sachs over here. Again, we were looking at this reversing at the 220 pivot, which is exactly what has happened. And that of CVX and COP reversing down at their macro support areas. And again, you can see some of these stocks stocks just really just taking off to the upside. The reason for actually speaking to you about MU is that there is the potential, if I can bring up the right chart again, that we are going to see similar price behavior in due course. Now, it doesn't have to happen this particular week. What you should be looking out for, first of all, number one, is, well, what happens at this red line here? This is the trend line extension out to the right. But also, if we crack down below this trend line, what happens at this area at about 26.50? What I can simply do for you is bring this green box over and suggest that you should be paying attention to candlesticks and also the oscillators at this particular point in time. This has got a potential very handsome reward written all over it, given if we see the construction of this develop in our favor. Now, what I mean by develop in our favor is that if this does sell off to 26.50 again, when we start opening up risk and reward and we start talking about where our legitimate price points or targets, we've got $32 on the upside from about maybe even a 27 sort of entry. So you're looking at about a $5 reward up to resistance, whereas the actual risk on the trade itself is less than $1. So, I mean, you can just visualize this with me. If you had an entry around 27, if it pulls down, you're at a macro support, and you have a stop somewhere around 26, depending on the construction of those candles. But again, I'm just sort of forward thinking this and getting a little bit creative with this analysis and sharing it to you so that you can hopefully make something of it in the future if it agrees with your own sort of analysis. You're really looking at a risk and reward ratio of at least 5 to 1. And these are the types of trades that we want to look out for, identify obviously before they set up and before they begin to move. So although this isn't something in my account right now, I mean, I don't even have a trigger, say for instance at 29.50. This is sort of an if-then scenario, and I like these types of scenarios because you can sort of put them in your back pocket, you can write them down, and you can revert back to them from time to time because, you know, given of course the right circumstances, it can turn into a very favorable trade for you. And all I'm seeing on this on MU is that, look, although we have essentially seen a reversal gap take place towards the end of July, this is earnings driven. You can see we've got 3 consecutive peaks up around this resistance area. Again, a gap in the opposite direction, broke below support. This is relatively bearish. I mean, it looks like a little bit of a triple top with a breakaway gap over here, or a reversal gap. Sentiment itself, generally, this is where it's going to shift. So what you want to look out for is demand in this green box. It doesn't guarantee demand in this green box, but it certainly is a location on the chart that you should be identifying, you should recognize as a significant area of importance, and then of course the subsequent opportunity in the trade if it does present itself. And I assume it is going to present itself in this particular way. So the ideal scenario for us is for it to come down to 26.50, start to develop a number of bullish candlesticks. What this is going to do is it's going to work in conjunction with the oversold nature of these oscillators. So you see how we're back into oversold territory. This is going to work really nicely as well if we continue to move into this, if we sort of sell off or overshoot this trend line as well. Generally, if you get a false breakdown of a trend line and it turns out to be a whipsaw in that direction, you get a very strong snapback rally. So this is something which should probably, if it does occur, happen very, very quickly. And I don't want you to miss out on the opportunity on MU. It is very important that I sort of, you know, tweak this or intertwine this into another piece of, or at least another video anyway, in complement to that of Facebook, Southwest Airlines, Costco, and Starbucks. So I hope it's been sort of worthwhile and valuable for you, me running through MU. There are other pieces of analysis that I can apply to this. There's a lot actually, but I try and keep it as succinct and straightforward and just as clear as possible, at least giving you the sort of the golden nuggets. And a lot of this is to do with just support and resistance, at least identifying important sort of terminal points on a chart, or at least reversal points, points of activity, what we call pivot points, hence the name pivot point trading, which we can observe, which we can identify, and then make sense of and obviously profit from as technical swing traders or active market participants, depending on, of course, your financial vehicles that you like to trade, whether or not you just buy or sell short stock, or if you want to learn about options as well. It does open up a new world of trading and subsequent returns too. So I'd encourage you, again, email me if you have any questions at all. success@pivotpoint-trading.com. That will come through to my personal email, and I'll get back to you as quickly as I possibly can. Enjoy your weekend, everybody. I'm going to say farewell to you. I'll be back with you in the week upcoming. All the best. It's James signing off on behalf of Pivot Point Trading. Farewell.